There are 150 million tax-paying citizens and entities in this country. Making a lot of money, you're gonna have massive capital gains.
That's like the Mario Kart thing, you know? Man, Mario Kart, that was a good one. That thing's gonna annoy me if they keep changing files, because I got put on the like the company server, and so now I hear it whenever they update a file, and it's really annoying.
Oh no.
You hear that?
Yes.
Yeah, I mean, it's like, how come I have to listen to these sounds of when these files are updated on the cloud? You hear that? I'm forced to listen to this cloud updating from other people's computers, and oh my gosh, that's gonna drive me crazy. What's up, people? Welcome. It's Friday afternoon in California. That means it's time again for tax questions. I'm sure some of you are gonna try to trick me per usual. We're used to that by now. And random news. You guys hear that Shaq is in hiding after I believe he got served for a lawsuit involving his involvement in FTX. So FTX, one of its major marketing strategies was to get all these celebrities to endorse their product. And so then what happened was a lot of them started getting a lot of flack, and Shaq has allegedly been in hiding ever since he got served by somebody in a civil lawsuit regarding to the whole FTX thing. So let me know what you think about that. I mean, Shaq's especially out here in LA, Shaq's such a big, public figure. You know that he is the general. Well, I mean, at least he knows the general, right? I mean, that's pretty much as close as you could get to knowing the general as Shaq. But anyways, all right, have I thought about getting a tattoo on the back of a candle so I can blow it out? Okay. I have no tattoos, actually. I feel like no tattoo is the new tattoo, because everybody I know seems to have a tattoo. And you said question mark. So I listen, I can't please everybody, but I do not have any tattoos. I do not have any piercings. I did have my ears pierced when I was like 18, and it was like too much trouble to just keep doing it, because it's kind of gross. So I was like, whatever. And nah, I'm just not into it. Now, it doesn't mean if you have a tattoo you're bad people. I think some people tattoos look really good. I just think I never found a picture or an image or a statement that identified with me so much that I was gonna tattoo it on my skin. Now maybe, maybe that's just me. Anyways, okay, so wasn't Taylor Swift also involved in the FTX madness? But she escaped it somehow, right?
So she asked a question.
So, that was part of SBF's whole, kind of little FTX marketing strategy that turned out to be quite successful, was to involve all these celebrities, and some are getting more lambasted than others. It seems like Taylor Swift so far has avoided the same sort of, criticism that Shaq has.
She asked, can you tell me that these are not unregistered securities? And they couldn't answer, so she never did.
Okay, so basically, she when FTX propositioned her, she had her attorneys ask them the right questions, and so she didn't get involved with it. Okay, what major and what law school did I get and attend? All right, so for undergrad, I went to UC Irvine, and I studied political science with emphasis in law. And then I went to Southwestern Law School. You could see my degree right there to get my JD. And then I studied taxation at Loyola Law School after that. Yeah, so lots of lots of school there. Hey, Fitzgerald, you're going to have to do better than that. But just so you know, it is going to be my birthday in 6 days. So, absolutely. Is there a way to set up a foreign corp and avoid paying get lead tax? So when you are talking about yourself as a U.S. citizen, you're subject to worldwide income taxation, right? So you make income anywhere, the IRS has the right to tax you on it. Now, if you set up a foreign entity, then that entity is not a U.S. citizen, but you as an owner of that entity are a U.S. citizen, and so then you can still get taxed by owning it. And so what you need to do is attenuate it twice. So what's a typical structure is having an offshore corporation or LLC owned by an offshore trust in a different country. Typically, we could do St. Kitts and Nevis and then Marshall Islands for a trust that is a popular destination for these kinds of things. And then what happens is the company is owned by another foreign entity that's not a U.S. citizen. And that's enough attenuation to get it outside of the purview of the IRS. If it's done correctly, these are the kind of things I wouldn't try to set up without any professional help. But that is how you do it. Okay. Hello, I am the Clam. What's up, Clam? I'm TikTok's favorite supervillain. I spread my clammy hands around the world, one hand at a time. That's chill, bro. My hands kind of sweat too, so like you're in good company. It's all good. All right. So you're saying I need to be born somewhere else. Okay, well that's actually a good question, because if you are born somewhere else and you're a dual citizen, then you can use the laws of that foreign country. But if you are a U.S. citizen, then yes, you are subject to WWI. Now that's why, especially a few years ago, when the tax laws changed, you saw a lot of wealthy people expatriating, and especially pre-2017, because when it was so expensive. Pre-2017, if you wanted to leave the United States and renounce your U.S. citizenship, it costs a lot of money to do so in taxes, because they knew that people would do it to avoid paying income tax. And so since 2017, it's never been cheaper to expatriate. You have to pay off all your current taxes, and it's like a $2,000 fee. I was actually reading an article that was saying that even that is a bit of an issue, because that means anybody who doesn't have $2,000 to spend on expatriating can't afford to. Therefore, it unnecessarily affects the lower classes, versus the richer classes. But the whole reason that you would expatriate in the first place is to not pay income tax. And I think that if there is enough money there, then it makes sense to do. And if it's $2,000, well, you're expatriating for another reason. Therefore, just pay the damn government. Then you would get out of it and not have to pay them anymore. So, I mean, listen, if you want to live in America for 188 days a year, you're subjecting yourself to taxation. If you renounce your U.S. citizenship and live here less than 100 days a year, then you're fine. So if you spend the other 100 days in Monaco and wherever the hell else you want to go, then you're good. But, yeah. Okay, where's your designer sunglasses at? I don't know, which pair? Do you have a pair of sunglasses in here?
They're on the top of the computer.
Alright, we got these ones today, people. These are the Ray-Ban Wayfarers that are the fold-up ones. Okay. How long can you go without filing before the IRS comes after you? Well, this is a good question, because it really is going to be a range, and it depends on how much money is being reported to the IRS, right? So we have what's called a voluntary system of compliance, which means the IRS only knows what you or someone else tells them. But on the other hand, it is a tattletale system in that everybody who pays you money in a legal capacity, either as a job, as a 1099 employee or a W-2 employee, is in fact going to report that to the government because they get to write off what they paid you and the taxes they paid on you against their income tax. And so because of that, it really depends on what is being reported. So if you're getting a lot of income reported and you're not on a W-2, so you're not having taxes taken out of it, then they will generally come after you within 3 years and audit you at least. And what that means is they're just going to do a substitute for return audit. And that means that they're going to fill a tax return out for you because you didn't file. And when they file for you, believe me, they don't give you any of the deductions or standard deductions that you would normally get. So the numbers are high and you're going to want to file your own tax return because when they do the math, of course, it's in their favor. After that, they'll start collecting on you, and they have 10 years to do it after the final assessment, either when you or them file. Now, if you're a W-2 employee and you're paying your taxes out of your paycheck every month and you don't file, you could probably not file for years, and they may come after you if you've got side stuff going on, but if you're paying your taxes and you're not filing, then you're just not accepting your refunds and you're paying them extra. And so they don't really care because remember, you only have 3 years after you file or after the year, whichever's later, to collect on a refund. So if it's year 4, year 5, then you're not going to get that refund anymore. So that's why you should file your taxes, even if you're going to get money back. If it's going to be a net zero, you should file because then it closes the statute of limitations and they can't come after you. Okay. I have a defined benefit plan. I opened myself as a solo owner. That's awesome, bro. Defined benefit plan is great because you can tie up money from the IRS and then negotiate with them during that amount of time. And that's something we do here as well. So kudos to you for figuring that out. That is a great tax deferral or tax negotiation strategy. Okay. How can I pay the least amount of taxes in dummies' words? Okay, right. So basically, there's 2 tax worlds. There are employees and there are independent contractors, right? If you're an employee, I mean, you're stuck. There's really nothing you can do except start a side hustle that could lose some money that you could suck up and get some deductions. If you're an independent contractor, you can pretty much write off anything that you can reasonably argue is in the pursuit of making a profit, including your car, lease payment, et cetera, et cetera. There's a bunch of stuff. So as long as you're spending money in pursuit of making more money, it is generally deductible. There are some things that are cut out of the code. For example, before the COVID, the 3 martini lunch was taken out of the code. It's been back in for the last 2 years, and they're going to remove it at the end of this year, they say. Probably not, though, but that's a good example. What is that? That means going out to eat at a restaurant, either with other people with your clients, with other people you work with your employees, with potential clients to try to woo them, spending money on dinner, and you can write it off. Now, you can't do that with entertainment. You used to be able to, but pre-2017, a lot of people think you can take your clients to a football game, a strip club, and write it off. You can't do that. Now, you can write off the food that you spend, so just make sure that the restaurant accounts for it the right way, the establishment you're at. Okay. What are my thoughts on discounted mortgage rate with people for 640 FICO score? Okay, yeah, so this was an interesting story that I had just heard of. And so basically, the people with better credit scores and putting down more money are getting a worse rate to help out the people with worse credit scores and less money to put down. Now, that doesn't make sense to me. That seems kind of anti-American. But it came from the Biden administration, so what do you expect? Okay. thoughts on filing an amended 1040, which is a 1040X. Good, that is correct. After they accepted my federal return. Okay, so if you have stuff you want to add to your 1040, you want to send in 1040X because either they're going to owe you more money back, or you don't want to get audited because you know they found out about something else. You got sent another 1099 or W-2 late or something like that. Then yes, you want to send an amended return. Now, I would wait off on it for a little bit of time because right now the IRS is only focusing on all the regular 1040s they got. And so if you send in a 1040X right now, it's not going to get looked at for a couple months anyways. So you got a couple months. I'd say send that sucker in July, June, July. You'll be fine. But absolutely, if you got stuff to add, we can send an amended return. And that's how you take care of that. And, I'll show you guys how to do an amended return on one of these things. It's pretty easy. You just got to add in another section. It's got a section on it that says, why are you amending your return? And you write in there, well, I forgot to add this deduction, or I forgot to add this income item. There you go. They'll accept your new return, and goes through investigation, they call it, but you'll be fine. It's just a regular process, and then it's back to the account, and they will modify the account. Okay. I have to pay to cancel my membership to the USA. Yes, in regards to expatriation or renouncing your U.S. citizenship, you have to pay. It's just like your subscription to a gym or something. Exactly. You want to cancel your subscription to the United States? You got to pay. And it is about $2,000, my friend. Okay, can you repatriate? Short answer, yes, you can. You might have to hop through some hoops to do it, but you definitely can repatriate. Kind of unorthodox to leave and then come back. Now, also, they may repatriate you automatically if you spend too much time in the United States. That could happen. And then they're going to say that you owe taxes for the entire time that you were expatriated because you never really left. So that's more likely how you're going to get repatriated is because they say that you owe them money. And that's how it goes. Okay. All right. Kentucky Rose says they'll never catch me alive. And see, honestly, this is, why do you think they have 4 million guns now, bro? They're just going to shoot you. Nah, listen, they probably won't shoot you, but listen, they're not going to kill you or take you to jail. They're just going to make it so you can't have a bank account, and they're going to make it so you can't have credit, and they're going to make it that you can't lend money or get a mortgage or get a loan, and they make your life miserable, or even a cell phone, anything that you need credit to get. So it's just, they can make you live under a rock, and that's not super comfortable. And so if you don't want to live under a rock, you got to play by the rules of the system. So knowing that, the name of the game is let's pay them the least amount as possible. All right. Okay. All right, Vasco says, bro, a girl stopped talking to me because I sent a smiley face at the end of a text. I do that sometimes, and she responded to me. So I think that had something to do with you, bro. All right. Yeah, because after you make a certain amount, you have to pay tax on a side job, say, right? Correct. After you make an ordinary income over the standard deduction, in both including your wages and your side hustle together, you have to pay taxes on it. So if you're already making $60,000 a year on a W-2 and you start making money, even a couple $1,000s on the side hustle, you are going to have to pay taxes on it. But that is why you get to write off when you have losses against your W-2 income. Now remember, if your side hustle's something that people would normally do just because it's fun, like hunt, gamble, fish, that kind of thing, then you're going to have to go against the hobby rules, because unless you actually are making money more at least every other year, your losses may get disallowed. Now, if you have an accounting practice on the side and you keep losing money, the IRS is not likely to say that it's a hobby. But having a business that just only pulls a loss for years and years and years and years and years, is a great way to get audited. So watch out for that. Okay. What happens if I didn't pay capital gains tax from stocks? You owe the taxes still, right? That's how it works. So if you see, the thing is your brokerage firm absolutely sent a 1099-B to the IRS, so they know how much capital gains you have. Most of the time, they're pretty accurate now because they do account for your basis, but watch out for that because sometimes, especially in the crypto markets, they will grossly over-exaggerate how much money you make so you don't really know what your basis is. But in traditional Fidelity, those kind of ones, that typically your 1099-B is going to have all that amount correctly done, but double check for it. But the short answer is the IRS knows about it, whether you file it for or not, or so you do owe the money. Doesn't matter that it's capital gains tax, that's just a separate tax regime. It's not ordinary income, it's just taxed at a different tax rate. You still have to pay the taxes to the federal government and the state government. Okay. What if I have more than 2 side jobs and hide 1 or 2? Listen, you can always, remember, it's a voluntary system of compliance. IRS only knows what you or somebody else tells them. For example, if you are out on the street selling flowers to people in cars and they're giving you cash and you don't report that to the IRS, they're not going to know about it. Now, should you do that? Maybe. It's my job to tell you that is illegal, so I'm not going to tell you to do that, but that is something that commonly happens in this world. It's called being paid under the table. Again, it is the law to report all income that you do make one way or another. So what you do with this information is up to you. Okay. I have a real estate investment properties. Is it for real worth claiming on my taxes for the deductions? Listen, so you have real estate investment properties, and if you're just holding them, you don't want to depreciate them, you didn't spend any money on it, you may not have had any taxable events that year, in which case you don't have to put it on your taxes. However, you can absolutely do depreciation. You can absolutely do a cost segregation analysis and figure out what can be bonus depreciated or Section 179 depreciated, which is when you get to take more of that depreciation up front than your normal, 27 and a half year depreciation for a residential property or longer for commercial. And that kind of stuff can help save you a lot of money up in the first initial years of owning that property. So if you're going to do that, it absolutely is worth doing it. If it's making money, then because you rent it out or whatever, then you definitely want to write off everything you can against that passive income as well. Okay. Wolf of Philly just got the #1 gifter badge. Dude, you rock. You win, Wolf of Philly. All right. Okay. Not true. The IRS has groups that only work on 1040s. The IRS is very segmented, and they have many, thanks Wolf of Philly, they have many groups that work on a bunch of different things, but the IRS itself, if you would like to, heart, love it. The IRS itself would, if you go on their website, they'll tell you not to submit an amended return during tax season because they are focusing on that. So do they have people that are still focusing on the amended returns? Probably. What I'm telling you is if you send it in now, it's going to take a bunch of time, and if you send it in a few months from now, it'll be okay. As long as you send in the amended return, you're fine. What you don't want to happen is you wait, probably 6 months or so when they file your return and do everything, and they haven't heard from you in a few months. This is going to happen after October for sure, when all the amended returns come in. And then they realize that you are short and you have underreported. Then you want to make sure you get that in first because they're going to charge you penalties and interest. If you're going to get more money back, definitely wait because that, that's a debit item to them or a debit item to them instead of a credit item to them, which would be you paying your taxes. So it's going to go to the bottom of the stack. Okay. had a good self-employed year a few years ago where I made $60K. Can I hide that if I worked fine? I guess what you said just applies to that, LOL. Well, yeah, so you heard what I said clearly. So, again, remember, it is illegal to not report your income. On the other hand, they only are going to know if somebody reports it to them. So if somebody paid you the 60 grand, they're going to report it to them because they don't want to pay that 60 grand on their taxes. That's just how it works. Okay. Just think, Al Capone, better report everything. That's right. Al Capone was running, a multi-million dollar drug and alcohol running business in the 1920s. And he famously said that he didn't have to pay taxes on his money because it wasn't legally gained. And so then the IRS changed the code that said even if your gains are illegally gotten, you still have to pay taxes on them. And that's how they got him. He went to jail, and he died of syphilis. So I don't know if those things are all 100% connected, especially the syphilis part, but the jail part certainly is. So even drug dealers now, the cartels, the mafia, all these people, you best believe they pay taxes on their income because they know that's a quicker way to ruin their operation, if you will, than by actually getting caught by the FBI or whatever, who's kind of in bed with them anyways, right? So whatever. That's why they're going to digital currency and trying to see where all your money goes. LOL. They definitely are doing that in one way or another. That's kind of just the way this whole thing is headed. I agree. And yeah, they'll be able to track everything. Because crypto started out as, well, it's not going to be traceable, but it turns out to be extremely traceable, doesn't it? Okay. On the tax return, they want your bank account balance. Is that true? That is not true. I don't know who told you that. Your tax return, they are not asking how much money you have. They're asking how much money you made in income that year. That's what you pay taxes on. You don't pay taxes on how much money you have. You pay taxes on income. So you could have $1 billion in your bank account. As long as you didn't make it this year, you don't owe taxes on it. You already paid taxes on it, presumably the year you made it. Or you got inherited it, and then in which case your parents paid taxes on it. But no. The only types of returns that would ask for balances would be for nonprofits and stuff like that, like a 990 or a trust may have to give up that kind of information based on what it's doing because it's not paying taxes. But if you're paying taxes, they're not going to ask you how much is in your bank account. And I know what you're thinking. You're like, well, if I take out more than $10,000 at the bank, they write down it on a little sheet and send it to the government. That's true. They're sending it to the Secret Service to see if you're funding terrorism. Literally, that's what they're doing. It's stupid. Okay. If I have 2 LLCs in 2 different states, but only do business in one, do I pay both state taxes? Now, you're only going to pay tax generally in the state that you're doing business in. Now, again, this is a slight caveat. If you're doing business in New York City or live in New York City and are doing business elsewhere, or vice versa with California, living there or not, these 2 taxing, and Pennsylvania, these 3 taxing agencies have been known to tax the difference between the lower income tax state that you live in and their higher income tax. So watch out for that. And you don't need an LLC for that. That's just if you're working and living in 2 places at the same time. But generally, you only can be taxed by one place because it's your place of residency that taxes you. Now, again, California, Pennsylvania, and New York, obviously the most expensive states in the nation, because not including Hawaii, will tax you simply for working there or living there, even if you or working there, even if you live somewhere else. So keep that in mind. All right. My ex-husband amended his return to allow me to claim our daughter. Should I wait till filing to claim her? Should I wait filing to claim her? If he's saying an amended return, you'll be fine. The way the IRS goes is the mother. So let's check this out. If he hadn't even amended his return, but you claimed your daughter, the policy of the IRS generally, almost always, is they're going to give they're going to allow the mother to claim the children over the father, and if they both claim it, they're going to go with the mother. That's just public policy down at the IRS. So you probably were good even if he didn't amend his return, but now he's not going to get audited. So there you go. You did him a solid. Okay. Do you help file taxes with real estate income? If so, how much? Well, it depends what you're doing, my friend, but we absolutely do. You can give me a call. The link is in the bio. We got people standing by the phones. Does collateral liquidation from margin loan count as capital loss? Does collateral liquidation from a margin loan count as capital loss? I don't think that would count as capital loss. That sounds like ordinary loss to me because interest is ordinary income. And I think it would fall under that category, much like you lost the collateral, right? Where did I go to law school? I went to law school at Southwestern and Loyola Law School in Los Angeles. Do I even work tax? Yeah. So I've worked in the tax industry for about a decade now. Crypto tax, very interesting. We do crypto tax, love it. It is extremely interesting. And oh yeah, you guys can see I'm actually an enrolled IRS agent. I have been since 2013. There's too many screens here for me to show you guys right now, but I should just take my word for it. All right. Thank you. That's right. Oh, okay. You meant to say, can I have multiple LLCs under one EIN? Nah, not a good idea, and probably not even legal. An EIN is like a social security number for a business. So to make those LLCs separate, you're gonna have to have separate EINs, and that's actually what gives them the limited liability protection. So absolutely, you're gonna want a different EIN for each LLC. Absolutely. EIN's free to get. If you need help, I'll just tell you how to do it. You just, go to the IRS.gov website. Just go and type in IRS.gov EIN. Skip all the bullshit that's trying to charge you for one and go to the actual IRS's website. Put in your information and they'll give you an EIN. You have as many as you freaking want. If you need help, we'll help you, but it's not that hard. Okay. If I change my last name to Biden, can I do anything I want and not have consequences? Sir, it certainly appears so. Or maybe it's just for people whose names are Hunter. I don't know. Okay. Interesting, man. I'm a financial analyst thinking about getting a tax. Have a finance degree. Love it. Finance degree. See, tax is the back door into finance. We didn't have legacy admissions into Princeton, but we still made it. You know what I'm saying? Anyways, welcome aboard. It's all about taxes, the hand that touches everything. So, welcome. Okay. Wow, that's crazy. Thank you. I thought I needed a registered agent to form an LLC. Remember what a registered agent is. A registered agent is basically an address to get sued at. So depending on the type of entity that you have, you might need a registered agent. For example, if you have an LLC that has privacy and it doesn't say who owns it, you're absolutely going to need a registered agent in case someone wants to sue your company without finding out who you are. Any kind of corporation is going to need a registered agent. Yeah, you're probably going to need a registered agent, but registered agent fee is really cheap. It's like $50 a year, so don't worry about that. Remember, the whole point of registered agent is so that someone can find you and sue you if they want to. That's what makes it legal. It's like you can't just form an entity and not have a way to get served a lawsuit, and that's why registered agent exists. Do I get stressed doing taxes? LMFAO. Not really. I don't personally do the taxes. I talk about the taxes on TikTok and YouTube. So this isn't that stressful. It kind of is because it's a lot of work. But we're here. It's all right. We're getting through it together. It's okay. Okay. Because I hate them even though I try to give them to my guy. Oh, the taxes. Yeah. Nobody likes paying taxes, right? But I feel like because of the industry I work in, I usually pay my fair share instead of trying to be super tricky about it. Because that's what I do with my clients, and we do a good job for them, so I feel like I got to be kind of on the up and up. Okay. How are the taxes with revocable trust versus irrevocable trust? Completely different. Revocable trust is a flow through to you, so you're just paying on your individual tax return. An irrevocable trust has its own tax return, a 1041, and it pays a higher graduated tax rate. It has the same graduated tax rates as individual, but they kick in at much lower rates. So you're going to pay more taxes with an irrevocable trust than a revocable trust, but that's usually not the reason that you set up an irrevocable trust. It's for asset protection and or tax deferral, but it requires you to distribute all your income by the end of every year to the individual who's then going to pay the taxes. Okay, would I suggest Delaware or Wyoming for the privacy laws? The answer to that is yes. Both Delaware and Wyoming are the two best privacy law states to have an entity, typically, specifically an LLC. They have the privacy laws that would allow for an LLC to be owned anonymously. Both Delaware on the West Coast and Wyoming Delaware on the East Coast and Wyoming on the West Coast. And they're about the same. I guess the difference is Delaware has been around longer. The corporate law has much longer. So they have established more case law. In Wyoming, they're extremely conservative, so you know that they're going to side with the business over whoever the hell is suing them. So those are the two things to consider. They both are really good. And you have a Delaware or Wyoming LLC hold a Delaware or Wyoming C corporation. Nobody knows who owns it. New York Times spent thousands of dollars trying to figure out who owned some of those penthouses in Manhattan, and they barely figured any of them out. Now I think they changed the law, so they can't do that in New York City anymore. But you can still do it everywhere else here, and no one knows whose houses these are in the Hollywood Hills, trust me. Okay. Why are taxes so much work? Well, it's funny because the reason that taxes are so much work is because companies like Intuit and H&R Block and Liberty Tax and Jackson Tax give the U.S. government millions of dollars every year in lobbies to purposely keep the tax code convoluted and confusing so that people have to pay them billions of dollars to do their taxes every year. And that is just the short truth. We could have a way simpler tax code system, but the tax filing industry has a huge lobby in making sure that doesn't happen because that's how they all get paid. Full disclosure, I do work in that industry. Okay, so guys, I gotta leave. I got a client meeting in a few minutes, so I'll try to get a few more of your questions. Okay, yeah, quarterly is no fun. Quarterly taxes are no fun, but remember, you're better off paying your quarterly taxes than getting hit up with a penalty. A good way to avoid your quarterly taxes if you are a small business owner is to make sure you pay the most amount of payroll taxes. As long as you're paying 100% in payroll taxes of what you're getting, then you don't have an estimated tax obligation. You only ever have an estimated tax obligation if you're making money outside of a W-2, then you're not paying payroll tax on it. So as long as, even if you're a small business owner, if you're paying yourself on a W-2, all of your money, then you don't have a payroll tax, an estimated tax liability. Okay, who do I go for unconventional tax saving strategy advice? Well, who do I go to personally? I go to my man Geoff, the man with the plan, my CFO. He's one of the most brilliant accountant, JD. So he's a CPA, JD, LLM combo. The dude's freaking brilliant.
He has a PhD too.
And he has a PhD too. That's right. Yes. And he's got an MBA too. Yeah. He's got more letters in his behind his name than are in his name. But yes, he's brilliant. So that's who I go to. Also, I've had some really good law professors throughout the years that have taught me a lot of great things. So I guess that answers that question. Roth versus traditional IRA at 23. All right. The Roth versus traditional thing comes down to, are you planning on making more money or the same money? You're 23, I expect By the time you're 43, you'll be making a lot more money than when you're 23. Hopefully by the time you're 33 or even sooner. So in that case, do the Roth because you're going to pay less in taxes now when you're not making money than when you are making money later. Now, if you're stuck in a government job or something like that, you're going to make money the same money the rest of your life. Just do a traditional so you can save it and have more deductions and have more money to play with this year. Okay. And so with that being said, I got to go, guys, but we'll see you next Friday. Bye-bye.